Jobless claims fall to 232,000 in the last week of August. And that's kind of weird in the sense that the Fed is expecting jobless claims as part of unemployment to rise as they tighten financial conditions, and that's not happening. Continuing claims go up to 1,438,000 from 1,415,000. So a little bit of a change there, and that's important because of people who are getting unemployment for the first time. More of them are staying on it. Not a significant amount, but that's something to keep an eye on. The other number out this morning is productivity and unit labor costs. First time for the second quarter, and it is still bad news. Non-farm productivity down 4.1% after falling 4.6% in the first quarter. That is not good news for the economy overall for obvious reasons. The Fed would like to see that go up. As productivity goes up, you can use fewer workers, and right now we're using more workers and producing less with it. Unit labor costs up 10.2%. That's a bit of a decline from the 10.8% we saw in the first quarter, so that's a little tiny bit of good news. Labor costs going down just a little bit, but overall, good news on the labor front in a way, and bad news on the productivity front.
You framed it correctly, Mike, and I'm with you, but I think we both refuse to call a downside surprise on jobless claims bad news.
Yeah.
It's good news for the labour market. It's just problematic for this Fed, who's looking to get inflation down. And, Mike, that's just evidence, perhaps, that this labour market's still tight.
It is still tight. I mean, you look at the JOLTS report we got earlier this week, you have over 11 million jobs still out there. People who are losing their jobs are able to find new ones. So it's an interesting situation, and we're wondering when the Fed is going to bite.
Mike, I'm going to make a joke about this, but it's not a joke. Dollar legs stronger here. That's a fact off of this. And John and I have been making jokes all this morning. I know you just got into the office, Mike, but the basic idea is there's a prisoner's dilemma. I'm not going to go into it now because of time, but to pick two of the four boxes, there's bad good news or good news and the other opportunities as well. Which is this for Jerome Powell?
Well, I would say it's probably bad good news in the sense that it suggests that somewhere out there is their goal, and they're not there yet. And you can see why people maybe have taken the markets have moved too much for today because tomorrow's going to be definitive. But what we can do is go from there. And
what
see.
What are you expecting, Mike, tomorrow? What are you looking for tomorrow? Given what we've seen here and how the markets are responding, where does that leave us for tomorrow?
Well, the change in non-farm payrolls has dropped down to 298,000 for the estimate. I mean, that's a 2,000 difference. I'm not sure it makes a whole lot of difference. So anything in that range would probably be considered good or average, even though it's much higher than we were seeing before the pandemic. But anything above that would certainly be a shock to economists. 528,000 last month was roughly double what they had expected. And if you get that again, then the market is going to obviously think that the Fed is going to have to tighten further, and that will have an effect on where they go from there.